Today, we're looking at Quantum Computing Inc., QUBT on the market.
They're really trying to make quantum computing, I don't know, more accessible.
More accessible and, importantly, affordable.
Yeah, that's the big one.
Which is ambitious, to say the least.
Definitely.
Especially in such a complex and expensive field.
Yeah, for sure.
What I find really fascinating about QUBT is that they're not relying on those typical super-cooled, energy-intensive systems that you always think of when you think of quantum computing. They're using something different.
Right. Yeah. It means their machines can operate at room temperature.
On room temperature with relatively low power.
Exactly. That could be huge, if that works.
A game changer.
In terms of making quantum computing practical and widespread.
So tell me more about their product line. What are they actually offering?
They've got a pretty diverse range.
Okay.
First, their, I guess you could call it flagship product, the Dirac series.
Okay.
And these are qudit-based quantum computers designed for tackling complex optimization problems.
Well, give me an example.
Think logistics, finance, drug discovery.
Huge.
All areas where finding the best solution out of millions of possibilities is
okay. So they're going after some big markets.
Yeah.
What else?
They also developed this EmuCore.
EmuCore.
Which uses this technique called reservoir computing. Okay.
For analyzing high-speed time series data.
Time series data.
Yeah.
Okay.
And this is particularly relevant to AI machine learning applications, where you need to understand patterns in data over time.
Interesting. So they're not just focused on building quantum computers themselves, but also on the tools to analyze the data from them.
Exactly.
It's like a whole ecosystem.
Yeah, they're trying to build that
around this technology.
Yeah, absolutely.
Yeah.
And then there's also quantum cybersecurity.
Okay.
Which they are exploring. They have a true random number generator.
Okay.
And quantum authentication technology.
So they're tapping into that growing concern about data security.
Which is huge, especially with all our digital communication.
Right. Quantum computers
exactly
pose a potential threat.
Absolutely.
To our current encryption methods.
Yep. So it's smart of them to be working on that.
Yeah.
So, Okay, let's shift gears a little bit. Let's talk about some of their recent achievements and partnerships, because I know they've had some wins lately.
Yeah, definitely some big wins.
Yeah.
I think one of the biggest is this recent contract with NASA. Pretty big deal. They're going to be using QUBT's Dirac 3 machine to optimize imaging for their space-based applications.
Space exploration.
Yeah, and this is a big validation of their tech.
What else have they been up to?
Beyond NASA, they've got a bunch of other things going on.
Okay.
They've got commercial collaborations, research partnerships to bring their photonics-based computing to different industries. They also have their own, thin film lithium niobate foundry.
A foundry.
A foundry.
In Arizona.
Yeah.
What's so special about that?
It's a key part of their strategy, this foundry.
Okay.
It lets them control the whole production process.
Okay.
For the photonic integrated circuits, which are like essential to their tech.
Ah, I see. So that vertical integration gives them an edge.
A big one. They don't have to rely as much on outside suppliers.
Right.
And they could potentially even open up new revenue streams by offering foundry services to other companies.
So they have the technology. They're working with major players like NASA, and they even have their own production facility. But let's get down to brass tacks here.
Okay.
How has their stock been performing?
Their stock performance has been pretty remarkable, I guess you could say. In the past year, it surged almost 1,809%.
Nearly 1,900%.
Yeah, that's almost unheard of.
That's a lot to unpack.
Yeah.
But I imagine that kind of rapid appreciation comes with some volatility, right?
Yeah, for sure. That much growth often comes with big price swings.
Right.
And QBT is no exception. High risk, high reward.
Classic. Yeah. Pretty much. So looking at the numbers, the latest close we have is $17.50.
Okay.
With a day range between 16.98 and 19.20.
Okay.
And then their 52-week range, 0.85 to 9.20.
Yeah.
Those are some serious swings.
Yeah, for sure.
So what do those numbers tell us about QUBT as an investment?
I think if you just looked at that recent performance, you might think, oh, this is a sure thing. But when you dig into the financial highlights and the ratios, it gets a bit more complicated.
Okay.
For starters, QUBT, they have a negative EPS. It's negative 28 cents.
Which means?
Which means they're not profitable yet. Their price-to-book ratio, that's at 10.16 right now.
Okay.
Which is pretty high.
Okay.
But even more striking, their price-to-sales ratio, it's a whopping 1,981.27.
Hold on. A price to sales of almost 2,000.
Yeah.
What does that even mean?
It basically means that the market is placing a huge bet on QUBT's potential.
Future.
Yeah, even though their current revenue is pretty small.
This is a high-risk, high-reward scenario.
Very much so.
Okay. What can you tell us about their income statement and cash flow?
Sure. Their quarterly revenues, they're still pretty modest.
Yeah.
They range from $27,000 to $183,000.
So not exactly bringing in the big bucks yet.
Not yet, no.
Which just highlights the fact that they're still in the very early stages.
Very early.
Of getting this tech to market.
Their gross profits are also pretty small.
Okay.
Usually under $60,000 per quarter. And then when you factor in all the costs, research and development, their net income has been consistently negative.
Okay.
Falling somewhere between negative 5 million and negative 8 million.
Wow.
Yeah.
So that's a pretty significant loss.
It is.
It sounds like they're investing heavily in their future.
Yeah.
Which is understandable for a company at this stage.
Yeah.
How are they funding these losses?
That's where the cash flow statement comes in.
Okay.
Their free cash flow, which is the cash they have left.
Right.
After covering the operating expenses and capital expenditures, it's also been negative.
Okay. Around -5 to -6 million.
So that means they're relying on outside financing to keep developing this technology.
Keep going, yeah.
Is that typical?
It's not uncommon
for companies in this space?
No, especially in these emerging high-tech sectors. To operate at a loss for the first few years, they often prioritize rapid innovation, market share growth over profitability. Investors need to be aware of this.
Yeah.
The biggest implication of this negative cash flow for investors?
It's probably dilution.
Okay.
To keep funding their operations, their growth.
Right.
QUBT might need to issue more stock, and that would increase the total number of shares, which could decrease the value of individual shares.
So even if the company's doing well and the overall valuation is going up, individual investors might not see that full benefit.
Because their ownership is diluted.
Yeah, that's definitely something to keep in mind. Let's take a look at their balance sheet.
Okay.
What kind of shape are they in overall?
Yeah, so the balance sheet gives us a snapshot of their assets, their liabilities, their equity at a moment in time. And as of their most recent filing, they had assets between $76.8 million and $79.2 million.
Okay.
That's a good sign.
It means they have resources.
Yeah, they have stuff to work with.
Okay.
What about their debt? Are they borrowing a lot?
Yeah.
Actually, no, they have a pretty low amount of debt, only about $1.3 million.
So they've been pretty cautious. Low debt is good. What about their cash on hand?
Their cash and equivalents are around $3.1 million. The limited revenue and high R&D costs suggest
they're going to need more.
They'll probably need to raise more capital.
But
yeah, the limited revenue. And cash burn rate.
Yeah.
Means they have to manage their finances very carefully.
It's a tightrope walk.
It's all about betting on the future with QUBT.
Pretty much.
Are they going to live up to the hype?
That's the million-dollar question. What about the competition?
Yes.
Are they the only ones in this quantum sandbox?
No, not at all.
Okay, so they're up against
startups.
Yeah.
And giants, IBM, Google.
The big boys.
Yeah, they're all pouring money into quantum research. I mean, QUBT's focus on photonics, that might give them an edge, but the landscape is constantly changing.
All right, let's shift gears.
Okay.
Let's talk about what the future holds for QUBT.
All right.
What are some upcoming milestones?
Their next earnings release is coming up on May 8th, 2025.
Okay, so May 8th.
Keep an eye out for that.
What are your final thoughts on this company?
I think QUBT is presenting a really bold vision here.
Okay.
Affordable, accessible quantum machines at room temperature, supported by their own foundry. Yeah. It's compelling.
It is.
But it's crucial to remember this technology is still
in its infancy.
Super early.
And the final takeaway.
Diversification.
Okay, there it is.
Don't put all your eggs in one basket.
Especially in a sector like this.
Balance it out with other holdings.
Makes sense.
Yeah, to create a more balanced portfolio.
Solid advice.
Thank you.
We'll see you next time.
For another deep dive.
For another fascinating deep dive.